As we speak, Bitcoin is breaking out, and with his recent purchase, it seems Michael Saylor is buying all the Bitcoin. Hey guys, welcome back. Now, Michael Saylor is pretty much the Bitcoin whale of all Bitcoin whales. And as of right now, his investment is sitting on a cool profit of over $1 billion. And this was simply by buying Bitcoin when everyone else was stuck in fear or ignorance. Now, fun fact, there are only two entities that have more Bitcoin than Michael Saylor, and they're not individuals or corporations, but nation states. That being the United States and the Chinese government. Now, what's getting a lot of people excited right now is that we're coming to a convergence of 4-year cycles. We have the Bitcoin halving cycle, the US debt cycle, and the US presidential cycle. All 4-year cycles all coming together and hitting next year. And so if history repeats, then it's going to be an explosive year for crypto, and it looks like it's already begun. And so in this video, we'll be getting the latest advice and insights from Michael Saylor to help people capitalize on what will likely be the biggest bull run in crypto yet. So first up, we have his all-in strategy, what it was and why. Then we'll answer the question, should we be trading or investing in this market, or maybe a bit of both? Then we'll answer the question, should we diversify our portfolio, or is the all-in strategy right for everyone? And then we'll finish with whether Michael Saylor thinks this time is different, and we'll be getting a super cycle. And this is where crypto no longer crashes due to the institutions and mass adoption of this cycle. And his answer just might surprise you. Okay, so lots of cool stuff to cover. First up, let's start with Michael Saylor's all-in strategy and the one thing he says that investors should never do.
Well, I think in the fall, I disclosed that I'd acquired 17,732 Bitcoin, and I haven't sold any. You don't sell your Bitcoin. And then MicroStrategy, in its latest quarterly release, announced that it had now reached 158,400 Bitcoin. So we have just been consistently acquiring more Bitcoin, and we've, done it through a dozen or more different transactions, cash buys, debt issuances, equity issuances, etc. So generally, you could say that I'm long Bitcoin. I think MicroStrategy is getting close to having invested $4.7 billion of cash, of real money in Bitcoin, just slightly less, something like that. And I bought the 17,732 Bitcoin, back when it was about below 10,000. So I probably invested $175 million of cash at that time in Bitcoin. Obviously, we're long-term, so it doesn't really matter what you spent to buy it. It matters more about how many Bitcoin you have and whether you're still holding the Bitcoin when Bitcoin hits $1 million a coin or 10 million a coin.
So I think it's fair to say that Michael Saylor is all in, and the one thing he says that people should never do is that you don't sell your Bitcoin. You want to be holding for when Bitcoin gets to $1 million per coin. Next up, one of the age-old questions when it comes to building wealth is, which is better, trading or investing? Now, investing can be boring. You simply just add to your position each week or each month and just hold onto it for 1, 2, 5, 10, 30 years. And the big appeal with trading is that you don't just have to sit and wait. You can be making money all along the way. You simply buy on the big crashes and sell on the big pumps. Easy, right? Well, what say Michael Saylor?
I don't think trading is a good idea for anybody other than a professional. So if you look, maybe 0.1% of the people, if you're a professional with proprietary models and proprietary equipment and proprietary access, you might be able to trade. But 99% of people cannot trade successfully. I don't think I can trade successfully. And if you look at the statistics, if you remove 1% of the trading days, the 1% most profitable trading days from your activity, there is no return. Like you would get a 7 or 8% return per year on stock portfolios if you just hold them for 100 years. But if you take out 2 days a year or 3 days a year, you actually get a negative return if you take out the 3 best days. So if you don't guess the 3 best days, if you're not long the 3 best days out of 365, there is no return. So statistically, 99% of the time, someone's telling you to trade, but you shouldn't. And 1% of the time, everything moves, but generally people can't predict when that 1% is. It'll happen when you least expect it. So trading is, in my opinion, a fool's errand. I think it's a very dangerous thing. And most people are going to squander their capital because they're going to try to outsmart the market.
And so the biggest Bitcoin whale says, do not trade. And interestingly, before I got into crypto, like everybody else, it was all about stocks. And the best thing about the stock market is we have 100 years worth of data, so we can see exactly what has been the best strategy. Well, amazingly, 100 years worth of stock market data shows only 5% of professionals can actually beat the market average in the long term. Now, yes, some professionals will beat the market in 1 to 2 years, but when it comes to the long term, even the professionals cannot beat a simple buy and hold index fund strategy. And when it comes to the average retail investor, it's even worse. 99% of people do not beat the market. So unless you've spent your 10,000 hours trading and have a couple of decades worth of experience building up a trading account, buy and hold is going to make you more money. And the biggest challenge you're gonna face is keeping your hands off your portfolio when big moves happen. Okay, next up, we're gonna take a look at a big part of portfolio management. And in this market, should we focus or diversify?
Let's talk about performance though. For example, Bitcoin was up 192%. And that works out to a compounded annual growth rate of more than 40%. And the S&P is up 25%. And the NASDAQ's up 17%. Gold lost 1%. Silver lost 18%. Bonds lost 24%. So in terms of asset classes, Bitcoin is outrunning all of the other conventional asset classes. And if you invested in anything other than maybe Magnificent Seven, you're just not keeping up with inflation. But the Magnificent Seven stocks, if you look at them, while Bitcoin was up 192%, Google was up 68%. Microsoft was up 62%. Apple was up 51%. Meta Group was up 15%. Netflix lost 15%. Amazon lost 15%. So big tech doesn't look like such a good diversification versus Bitcoin. Bitcoin's going up 40% a year. The cost of capital is 40%. That means anything that you invest in has to yield that, right? Like what's my forecast? My forecast is Bitcoin goes up 40%, then 35, then 30, then 25, then 20. And like 10 to 20 years out, it's clipping along at 20. And then over the course of 100 years, it's growing 14% a year. And against that, the S&P index will probably grow 7% a year. The money supply will grow 7% a year. So if you diversify in the S&P index, you're just going to maintain your wealth, track the money supply if you get lucky.
And so the reason Michael Saylor is all in Bitcoin is because he strongly believes it to be the apex property. Quite simply, if something is outperforming everything else and will continue to outperform everything, then why hold anything else? Now, that reasoning is solid. However, it is based on the assumption that Bitcoin will continue to outperform everything else over the next 10, 20, even 100 years. And unfortunately, as of today, I'm still not aware of anyone who knows the future. And as no one knows the future, due to any number of reasons, Bitcoin may not even be here 10 years from now. And this is why the mega big billionaire investors like Ray Dalio, Warren Buffett, Paul Tudor Jones, and on and on and on will never just be all in Bitcoin. And being in just one investment for 10, 20, even 100 years is one hell of a ballsy move and would be classed as high risk. Subjective. Okay, and to finish up, so far in Bitcoin's history, we are getting 2 years of an explosion in prices, followed by a year of an epic crash, followed by a rebuild year. And so the big question is this going to keep happening, or is this time different? And because of institutions and mass adoption, are we never going to see a big crash again?
So what's the right forecast? It's highly likely that what you have is a serpentine growth, right? Where you're going to grow with a slope of 40 or 50%, and it's going to be cooling down from 45 to 40 to 35% to 30% to 25 to 22 to 20% annualized over the course of the next 20 years. It's like something like that, but you won't get a perfect exponential. What you'll get is a surge up, followed by a crash down, and you'll have this serpentine pattern growing. So there is a cycle. What will drive the cycle? Lots of dynamics. A regulation will drive the cycle. Halvings will drive the cycle. Awareness will drive the cycle. I mean, Apple will drive the cycle. Big tech will drive the cycle. Technology will drive the cycle. War will drive the cycle. Panic, hyperinflation will drive the cycle. And it'll look different depending on what country you live in. For example, Bitcoin is already at all-time highs in places like Argentina, or Lebanon, right? Or if your currency collapses, you're already at the super cycle all-time high. But in other places, it isn't. So you got to consider frame of reference. So I don't think this is a problematic thing. What it means is, if you're trading Bitcoin with a time horizon of less than 48 months, then there'll be some point where you might be underwater in your latest purchase. And the important point is not to panic and to look out 10 years.
Michael Saylor is the Bitcoin whale of Bitcoin whales, only surpassed by the US and Chinese governments. 2020 was the year the penny dropped, and he began investing everything he could into the #1 digital asset, Bitcoin. When it comes to trading, quite simply, he says for 99% of people, just don't do it unless you want to lose money. When it comes to diversification, when you own the apex property, then what's the point? Just buy and never sell your Bitcoin until $1 million per coin. And interestingly, he believes that we're still going to get these booms and crashes in the crypto market. But if you ever find yourself underwater, then simply don't panic and lengthen your time frame. So there you are, guys. I hope you enjoyed. Lots covered. And so tell me, do you agree with Michael Saylor? Let me know below. However, just remember, to get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.